Stavros Tousios for M4Markets. We're going to close the week with gold and dollar against the yen. We lost the 2K handle, big time, fallen, broken instantly the 1965, 70, whatever that was. And it looks like now there is some sort of respite. Can we go down to 1940, the 50% Fibonacci of that last leg to the upside before we see further upside? Yes, it's very likely. But can we also go up first and then come back down? Also something likely. Where I'm looking, however, on the 4-hour over here, is I have a huge divergence over here. Okay, and let's not forget also that we have fallen to like 20 over here on the RSI on the 4-hour. Also quite oversold, if you want to think of that, of it that way in terms of momentum. And as you just see, momentum just turned back above the 30 line. So the kind of worrying sign is that we have actually come and tapped into that territory, which opens pretty much the door down to the 1800s. Okay, and it would have been a different case if we had just tapped that territory, like touched it and then moved up, but we did come inside the 1950, for example, below the 1959. And this is concerning because it actually implies that some more downside can be seen, could be seen. Now, we've always called, and we've been talking about the 38 and 62 as correction levels. When we break 38 like this, it's more typical that we're going to go and bounce at the 50 rather than at, stop at the 38 because it was an initial break. So I will be paying attention, and we're going to draw also a channel going down over here and paying attention to the return back within this, I would probably just say main bearish trend. There is also the accelerated, or you can call it ordinary if you want. But now the focus in the shorter term remains on the low over here, which is 1970. If we take that, then maybe we can see that move to the upside before we go down. But if we fail to cross above that level, guys, there would be high likelihood, and 1967 seems to be a level as well. 1967, high likelihood that we do one more leg to the downside before we see at least a decent correction. Now, when it comes to dollar against the yen, I'm not sure if we talked about the 140 or so. I think we might have, because the truth is that this Fibonacci extension was here when I revisited the chart, so it must have been a case where I left it there and we probably talked about the 140. But anyway, we have done, well, depends on how you see it, but 1 and 2. And internally you have 1, 2, 3, 4, and 5, which means we can correct and do one more wave up. 140 is something that we'll be considering. Or there's also a case where this could be 1 and 2, and this is 1, 2, and 3. We're going to get 4 and 5, and then 4 and 5, which might see a little bit more of volatility between the 139 and 140 levels. Okay, now here's the important thing, guys. We are seeing currently a divergence, okay? But at the level that we are, we reached 87 and we came down to 81. Now we are down 68. As long as we remain above that high, 137.90, and also this one, 137.80, let's say, then this remains biased to the upside. At the same time, as long as we are above 136.76, that also remains a case to the upside. Only if we lose the 50% around 136.13, things can start changing. But until then, any sort of correction, any pullback, it has more chances of continuing to the upside rather than anything else. So let's not forget also, from a channel perspective, the ideal scenario for a drop would be that we tap that channel over here, which is around 140 as the 100%. Okay, let's not also forget that the leg to the downside, the medium term sort of leg, the 50% is at 139.57. So a false break up here, and then either a reversal to the downside, or perhaps even a continuation after a pullback up to the next major target, which is at 146.50 or 70, the 1618, which is in a very close proximity to the 79 Fibonacci retracement.